Welcome back to the Leading Detection podcast. And we have a slightly different episode for you this week as we are joined by two guests. We are sat alongside Ivan, who was formerly leading the fraud and risk divisions at Crypto, PaySafe and Groupon, and now CEO and co-founder of NOTO. And they're a one solution for all fraud prevention, risk and red tech needs. And sat alongside him is his former colleague from many years ago, Markus Kemptner, who they worked together at PaySafe. And since then, Markus has been head of anti-financial crime at BVNK, and he's now founder of RiskRiot, a specialist consultancy in the space. Now, great episode. We speak for quite some time and talk about the current state of financial crime, what that means for enterprise fraud management, and how to be wary of the way AI is being used in the industry. Great episode. Enjoy. Welcome back to the Leading Detection podcast. And we've got a bit of a first for you. We've got a fireside chat. So we've got two guests with us this week. So we've got Ivan and Markus. Thank you both for joining.
Hello.
Awesome. So for the listeners, in case they don't know who they are, just a quick intro to who you are and what you do. Ivan, we'll start with you.
Thanks, Matt. I'm Ivan. I've been in the fraud prevention and payments field for the last 19, almost 20 years. Previously been with companies like PaySafe through all of its transformations, Groupon, Crypto.com. And for the last few years, CEO and co-founder of NOTO, which is an enterprise financial crime prevention and management platform. Again, thanks for having me today.
Oh, great to have us on, and Markus as well. There's a link here, your previous colleagues.
Indeed, yeah. I think we worked together for how many years?
I think 3 or 4 years, but that was like 10 years ago.
Yeah, indeed. Yeah, so my career also started about 12 years ago with PaySafe, where I also went through all of the transformation that Ivan just mentioned, which was quite challenging also, but interesting and quite a big learning curve. After that, I joined BVNK, doing pretty much the same thing. And now I've founded my own company, the RiskRiot, which is a consultancy company that helps fintechs to steer through these processes, to set up the financial crime environment and architecture, and also guiding them with operations. So yeah, thanks for having me here.
Awesome. So yeah, we've got two client-facing folks, so you'll have a good spread of experiences and different problems and different challenges that we'll be able to tap into. And today we're going to be talking on the big scale. We're going to be talking enterprise financial crime management. So yeah, unifying fraud prevention, AML, compliance, real-time payments, modern onboarding. So yeah, to have a little bit of a background from there, let's look backwards. A lot's changed in the past 15 years to what we're experiencing now. Because you want to kick us off of what you've seen, what you've learned from what's been going on.
I mean, 15 years is a bit long.
Yes.
I'm not that long in that area, but I can definitely say in the last 12 years, it changed significantly. It changed from, let's say it changed into something which was more leading into cat and mouse game, because the fraudsters and the financial crime, or people committing financial crime, are not the people that we imagine sometimes with the hoodies on the laptops, just hacking. It's really organized crime groups that are on the top notch of the technology as well.
Mm-hmm.
And can only give some examples, like, I mean, they're for years already using botnets to initiate transactions or log into the account, using nowadays, which is quite challenging as well, machine learning for deep fakes for KYC, for example. And this led to cat and mouse game, as I said before, where the financial crime or anti-financial crime area was always a step behind, kind of. So we were reactive rather than proactive. And this means also that we need to change our mindset into something more proactive, where we identify even threats that we don't know yet. Because with the technology that they are using, it's a really highly scaled and fast game that we are playing here. So it doesn't only help to react on certain threats, we need to be proactive with that. So that's how I would sum it up, how it all developed. It's the technology, not only on our side, but mainly on the fraudster side, that evolved a lot.
Yeah, it's no longer the Hollywood hacker. Evan, what have you seen change?
I mean, I think Markus already outlined what change on kind of on the other side of the barricade with the parties and the people and the individuals and everyone involved in conducting different types of financial crime. But that kind of has always been following what financial institutions have been developing and offering to us as consumers in that time window, right? If we all look back when we got our first bank account, there wasn't, at least speaking for me and being 45, there wasn't an online IDV process. I showed up at the bank and opened a bank. And especially since COVID, I think the pace only, and even before that, picked up. Nowadays, what's considered the norm for you opening in just under a minute, sometimes an online account that allows you to transfer not just fiat, but crypto as well through various blockchains, is just bringing more opportunity for fraud, money laundering, and anything that nowadays you can operate entirely remotely and online 24. Just think about the evolution in the crypto space in the last 10 years.
Yeah.
Starting from a single cryptocurrency, maybe, more than 10 years ago, what do we have now? So the pace is only increasing, like Markus said, and I really want to highlight that online crime is getting more and more organized. It's not so much single groups or individuals. It's really entire syndicates that also benefit from the global world that we live in and the very well connected world that we live in.
Yeah, we're kind of coming through the information age, and we're kind of adding the age of speed, right? Everyone wants something super quick with all the information on top, and financial institutions are stable. They're legacy systems, right? So overarching, is it an issue, the pace that we're working at for financial stations? We can't just bolt on.
I think it is, because in the attempt, especially if we talk about traditional financial institutions like banks and legacy trading platforms, them trying to follow very often resulted in that fragmented setup. Okay, let's bolt on something to quickly offer online verification with your identity card and selfie, but let's not connect it to anything else because it's too complicated. What we have there kind of works, but it's also 10 plus years old, so doesn't have the necessary API, or it's going to be too much scope. Or let's do something and bring in, I don't know, a new instant deposit or withdrawal option, but we'll connect it later to the monitoring system. Or, let's bring in that cool AML tool, but the fraud guys will have something later. And that kind of at least from my experience, that piecemeal approach, if you want to call it, just patching problems rather than having a long-term strategy. And even at all considering having a platform that may have different use cases and applications leads to, I don't know, you may want to call it a spider web of solutions that only adds on to the complexity of managing them. Because, when you start multiplying the tools that you have, it's just more environments, more data sets to monitor, more buttons to push, if you like.
Yeah.
Maybe I'm stepping aside, but last year I was in the Auto Museum of Alfa Romeo, and they had that weird thingy there, which they built with 2 engines, 2 transmissions, 6 pedals, because they couldn't quite synchronize the 2 engines. Only a single pilot was able to drive that thing. But yeah.
We're going to move on to kind of fragmentation and all these silos. To finalize setting the scene here, Markus, any other points you want to add before we jump into it?
No, I think to the details we get in the next section anyway, but that what Ivan said, I fully agree. I mean, and it's not only a problem for banks, traditional banks, that are now being chased by their digitalization and then not being able to cope with it due to legacy systems. I also saw that startup scale-ups, because when you create a startup in the fintech area, your first focus is for sure not financial crime or regulatory things. So you build your systems based on the use case you want to cover for the customer, but not for the security, because this is something that you don't have the time and the budgets for that in the beginning. And then over time it scales up, and you get more and more issues with that area. And in worst case, you even build separate different products and technically have them in different. This is where we come next to in different data sets or different databases, which also makes it super difficult then to integrate your financial crime systems and even increases, or you have the risk then that you even miss out things, because it might be, if you don't have a very good architecture in the beginning, it might happen that you even miss out a certain product to being monitored through your systems. But I think it's a similar problem with different root causes across the whole financial landscape.
I really actually like that perspective because in the startup environment, often risks get, how to say, neglected until they really become the roof is on fire situation. While in traditional banks or even the kind of upper tier in that space, the systemic banks, the infrastructure ones, the big ones, they're aware of the risk, just their pace is slow and they really have a lot of baggage, so to speak, that they're carrying in terms of legacy systems and oftentimes entire functions. So inevitably some politics. But yeah, different reasons for ending up in the same fragmented or incomplete setup.
Yeah.
Markets really nailed it there.
With traditional banks, I mean, they can't really help it. Some have been around for hundreds of years, right? They've just gradually added and added and added. Whereas we've got the more modern neobanks, fintechs, who could have had more thought about planning. Would it ever be detrimental for a company to put fraud first? Is it slow them down too much when they're developing products? What's your thoughts there, Markus?
I mean, I have one company in mind at the moment. I will not say names now, but they did it really smart at the beginning from scratch. They just founded a new fintech company this year and already had the whole architecture in mind, how it should look like in 5 years, including anti-fraud and financial crime. So if we really have some senior people in there that have the experience in the fintech area, they might be able to think ahead. They might be able to think, okay, what are going to be the challenges that we will have when we scale up in 5 years, and already build the foundation around it so that it makes it easier later on to add additional tools to adapt to it. But yeah, it's a cost thing. I mean, definitely, if you consider all of these things at the very beginning, it will slow you down a little bit, but with the benefit that it makes it way faster later when you want to scale.
Looking forward. Would you agree, Ivan?
Yeah, I think it comes down exactly to that, the right planning and the long-term approach. Obviously, probably that has to come from experience. Somebody that, have been in a situation where you have to firefight, and especially when you are in such a scenario where, let's say, you're facing huge fines from the schemes because you're breaching the different fraud and chargeback programs, or your correspondent banks and other PSPs are unhappy about the state of fraud in your transactions, you are forced to do something quickly because you have to deliver on your remediation plans and what you started promising when you entered that explaining mode situation. And this never leads to good and robust solutions because then you are under very short deadlines to deliver, and those inevitably result in cutting the scope or not making the right choices or making a bunch of compromises. And I think one of the key success criteria when you are picking any fraud or AML or FRAML solution is really not cutting corners during the implementation process. If you, whenever you are launching your business or launching a new product line or a new feature, if you just take the time to talk to experts, do some risk assessment, saying, spend ages on that, but just try to account for what the risk will be if they are not at the moment, and factor in that in your strategy. I think actually it won't slow you down. Maybe it will be actually buying you time going forward, not having to firefight or not having to firefight as often as you would if you go completely with the mindset of we'll fix it when it breaks or when it becomes a problem.
Yeah, being a bit more unified. So what does being unified mean in practice? So in theory, it sounds great. In practice, what does it mean?
I can give you my and our perspective from NOTO because we try to develop and offer a solution. We do. that caters for the two main areas in financial crime: anti-money laundering with all of its aspect, and fraud prevention, again, with kind of its main types, the payment and the account fraud.
Yeah.
And the underlying data, if you look behind those two big areas, is the same. If you're a bank, you have your client profiles and the transactions. If you're a fintech that offers some sort of a modern wallet with anything that we're used to see nowadays in the challenger banks, crypto trading option, ETFs, shares. Again, it's client profiles and different types of financial or non-financial transactions. By non-financial transactions, I mean logins, account openings, account updates, all that type of actions that we do with our accounts on a daily basis. And if, again, you spend a little bit of time of putting that long-term strategy, unifying should mean considering before you plug in different tools that are just point solutions that just solve one thing, and properly exploring the marketplace. Is there kind of a baseline core platform that can be crunching most of my decision making and monitoring, to which I can connect specialized solutions that handle kind of the point use cases and challenges, like an IDV vendor that would be OCRing IDs, performing liveness checks, making sure it's a live person holding that ID card.
Yeah.
But then what do I do with that data? How can I merge it to the rest of the account opening data? How do I merge it with the device data that I've collected? So I can see that Ivan is holding an ID card, but coming from a Windows device today, sitting in his home in Sofia or somewhere else, which it might be raising some questions. Plus, what else can I do with the rest of the data that I can potentially want to enrich, bringing some external party to see, is that email address valid? Is it from a domain? Is it just created? What about my phone number? Is it a subscription or a prepaid one? Or it's unknown, it's a voice over IP number I just online. So the ability to properly collect that data around a single customer profile and hold it in a single location where you can use it then in rules, models, whatever now.
Yeah.
Trying not to jump right away into the machine learning and AI topic, but this is the point of unification and consolidation, trying to make use of your data pool that holds those two main types of data, client profiles and transactions. And if you can be interpreting that data for the different use cases, then you've already have a chance to reduce the number of vendors that you need by 2.
Yeah.
Speaking of the two main areas again, ML compliance and fraud prevention. But I'll turn over also to Markus.
I think you nailed pretty much everything down that I noted down that I wanted to mention to this question. So nailed it perfectly. The only thing that I might add is also, so this is from a technical perspective, that all of the data should be centralized, because it makes it easier to plug in your tools, or if in best case you have an orchestration tool like Ivan mentioned, where you can then just plug in all of your data to one orchestration tool and then from there add all of your other tools. This makes it really scalable and easy to change tools if you want to change some. And also it makes it possible to reuse information that you have from other sources, from other tools in the next tool. So, I mean, I always use the Swiss cheese model to explain this. So you have different layers, and then if you really put it right, that you don't have one hole that goes all through. But for that you need data to cover the weaknesses from a tool before in the sequence with the tool with the next tool in the sequence. But what I wanted to add to it is also from an operational perspective. I think a centralized case manager is also really, really important. I mean, when you think about, normally you have 4 to 5 different tools in the financial crime area, at least. I mean, you have KYC, you have device fingerprints, you have the fraud management tool, and you have in worst case, also in a separate ML management tool. So you have several tools that the agents need to work with, and flip through these tools takes a lot of time. And also to collect all of the data from the tools that you need to solve a case when you're doing an investigation takes a lot of time, and this can add up to at least 1 FT. It depends on the scale of your business. And plus, not only inside the financial crime area, it also makes a lot of sense, in my opinion, to have a holistic case manager for the whole companies, so that it also includes customer service, for example. Because when you think about for example, when you stop a transaction or you lock an account, the customer will obviously call up in the customer service department, or the customer service department calls the customer. And if you have separate case management tools, there will be a bouncing between the agencies or between these departments, which increases the time spent on a case a lot. And this is super frustrating for a customer, as if you have one common case management system where you even can feed maybe from the rule hit already a path to resolution into the customer service case manager, you already might have a solution before even that makes it unnecessary to contact the compliance or the risk department. The customer service department could solve it by themselves. Or if you have additional information, write it down in the case manager already, and the risk agents already have the information, so that there's no need for the bouncing anymore. So this would add up a lot of speed and reduce the costs as well.
So a highly inefficient system right now, and we'll mention it quietly, but AI, can we lean on this to lighten the load, lighten the burden, shall we say?
I mean, do you want to start, Ivan?
No, go ahead. Just to your previous point, as crucial as case management is, let's not forget also the whole MI and reporting exercise, and having a disjointed setup that some of the data lives in the vendor, you're recording some as a result of the implementation, but you have, like you said, so those standalone implementations. And let's not forget that every solution that you onboard produces quite a lot of metadata.
Exactly.
A typical transaction running just through a rule engine will be, 50 to 100 fields, but running on top of it another about 50, 60, 100 rules or more than just triples or quadruples that data that you end up having. And I think we both experienced the difficulties when you're dealing with a centralized BI team that doesn't really understand neither the compliance or the fraud side of things. But your hands are tied because you are not given access to the right data because of security reasons or because it's just not collected in a single place. Back to AI, I guess.
When just one thing to what you just mentioned. I mean, of course, because you said you don't have access to the data. Of course, when you have a centralized data and centralized case management system, you need to have different permissions for different fields, obviously. But this can be solved easily when you have a smart system where you can do permissions per field, for example. Then that's easy to solve. But you can at least easily get access to it to what you want or what you need. Yeah, to the AI. I mean, AI is the difficulties that I have with AI is it's a massive buzzword at the moment.
Yeah.
Where most of the people think about the large language model when you talk about AI. But in my opinion, the large language model is the least effective for financial crime prevention because it takes a lot of resources and this is inaccurate.
Yeah.
So the only way where I could think about the large language model where it can be useful is in the communication with the customer when you want to have a case resolution that you want to automate. That makes sense. But there are so many other ways that you can utilize it, like random forest to optimize your rule set, for example. I mean, this is something where you can build machine learning models to replace or optimize your rule set and make them way more efficient, or even make you, in the feature selection process, make you aware of fields, data fields, and where we were talking about before, there might be hundreds or thousands of data fields that you might have available that you don't even think about that you can utilize to work on a certain case or to prevent certain patterns. And this is where these models can help you a lot. Or the decision trees for triaging alerts. If you're over alerting, then to prioritize certain alerts. Or one really important thing, going back to what I said in the beginning, that we need to be proactive instead of reactive. There you can use models like clustering or anomaly detection to identify things that you don't know yet. So, for example, if you cluster your customer base and all of a sudden you have in a certain customer cluster an anomaly or an outlier, that means you should have a closer look to it because it does something that is not expected to do because it's falling out of your customer cluster. Or thinking about money mules or account takeover, there you can also utilize, as I said before, anomaly detection. So if he changes his behavior all of a sudden on a single customer. I mean, going back to synergies that we mentioned before within the company, when you utilize data that you have but you don't access, InfoSec, for example, has this approach for quite a while already to identify anomalies instead of predefined
Yeah.
patterns.
Uh.
So I think it's a really broad term, this machine learning and AI, where we only think about the co-pilots or ChatGPTs that might be useful, but are really the least efficient for financial crime, in my opinion. So there is a big variety that you can utilize.
If I may go to Markus's points, yeah, it certainly is a hype. I mean, I think we've seen several of those, and as we started our conversation, what is changing? I think only the pace. Kind of the common denominator is that the pace is quickening. I think now we're moving faster from one hype to another. If we just think about, my memory might be slipping me, but the first IDV solution that I saw, Jumio appeared, 10 plus years ago, 10, 12 years ago, maybe more. And now that ecosystem is so saturated with solutions so quickly, just because the kind of technology barrier to entry was were lowered on the accessibility to the OCR technology, which is the basis of all of it, with obviously fund add-ons and developments. But I think in terms of AI and machine learning, we have to be clear that the two are different fields in different areas. They're not interchangeable. It's different, plans, if you like. And if we want to talk about AI, yeah, certainly at the moment, I mean, what do we use AI for? A bit more advanced Google search, really? Generate some content, maybe?
Hey, you can make some funny videos.
Yeah. And to all fraudsters that can't write scripts for bots anymore, it can put the scripts for them, right? So there you go. Barrier of adoption is being lowered on all fronts. But I think LLMs for fraud prevention, maybe for automation of review and investigation of cases or some initial triage, because in any population of alerts, there is a good amount of false positives, let's face it. No matter good your rules and models is, there is an amount of false positives. Sometimes it's higher, sometimes it's lower.
Humans do strange things. Right?
Yeah, exactly. So you can certainly use it to automate that, but again, you have to be wary of the fact that the technology is not that robust yet. We hear about hallucinations, inconsistent results. At the moment, a lot of vendors are building agents that basically you can plug into your review and investigation queues, and they do the work or the initial work for the analyst, or even sometimes they can be let alone to make decisions and close cases. Some framework of control, I hope. But all these are built on the APIs of the guys that we just mentioned: OpenAI, Gemini, Microsoft, Meta. And yeah, like, what happens with your data? Where does it go? Everyone is so concerned about GDPR in Europe and everything, but we're forgetting about that. We're forgetting that these guys do almost daily adjustments on their LLMs and versions, and it's a little bit of a black box how exactly they're managing that process. So entrusting them to provide a solid technological basis, maybe not at the moment, probably 5 plus, 10 plus years. But certainly the technology in the AI field brings a lot of promise. We're doing some experiments at the moment, and even at the first run, not even at a large language model, but something much simpler and a small, even medium-sized model. Just being trained over 1,000 kind of anonymized cases, it already kind of scored like 65, 67% of, success rate in solving the cases as a trained analyst would have. So we can't neglect it. We can't just say, oh, it's just a hype. It's too early. Like, forget about it. How it will evolve, we have yet to see. I was chatting with a friend the other day, and he made the analogy of, look what happened in the crypto space over 15 years of that space being around. And from a single cryptocurrency to today, what happened? So all of the evolution that took place. So it will be the same with AI, but for the time being, should be clear what we want to achieve by implementing it. Results very closely and frequently, and do not be in such a rush to disconnect the human out of the final decision, because again, The results today might be good and solid, but as long as you are building on a set of external APIs and services that you don't fully understand and it's not fully disclosed how they work. And let's not forget cost. Like Stripe made that hype several months ago by announcing that they built LLM for payment acceptance optimization, if I'm not mistaken. Since then, we haven't gotten any tangible result detail case study. Think about it. In transaction screening, you're struggling to return a response in 100 milliseconds, 200 milliseconds, 300 at the most. An LLM at the moment cannot return a yes, no response, maybe a response in under a second.
Still thinking.
You're thinking, maybe I'm being asked about, and Ivan actually is looking for something in the Sofia region because his IP address is there, and that's the first 30 seconds. Yeah, but we don't have 30 seconds in real time to make the go, no go decision. Transaction.
And even that costs a lot of resources already. Even the 30 seconds answers. I mean, you know that all of the news in the media, how much electricity and other resources it uses for the LLM models to do this. If you have to do, I don't know, 100 transactions per second, a way you can handle that with these resources.
Yeah, I mean, truly today, looking at the pricing of Amazon, sorry if I'm going a little bit off topic, but to rent a machine with the necessary GPUs for our data scientists to do some experimentation, it's $8 an hour. It doesn't sound like a lot.
What's up?
You're not getting out a lot of tokens as the productivity is measured there out of it, Yeah.
The new currency. It'll go from fiat to crypto to tokens.
Single machine, well, you end up needing a lot of these. And $8 an hour is like $6K a month because the meter runs 24/7. It's not our human day weeks, Monday to Friday, 4 hours a week.
But when we talk about AI, governance is an issue, right?
Yeah, I mean that's
what would you say was
being biased.
Yeah, what would you say if we were to kind of prioritize right now from what we know now, the biggest issue when it comes to AI and governance? What would you suggest? Start with you, Markus.
I mean, as I said before, and I mean, even mentioned before, we should separate machine learning and AI.
Yeah.
With AI, I think the governance, it's not doable because, I mean, it's a black box approach. And then even the regulator says you shouldn't have a black box approach and definitely not a final decision by the AI. If I'm talking about machine learning, yeah, there it's possible. You can have a white box approach. You can make sure that you don't have a bias by looking at your data closely. You can do it in a way that you have the right governance over it, which you don't have with the large language models that we have.
Shipping this safely, Ivan?
Governance over AI would be even more complicated than it's over machine learning, because I guess you'll have to start even deeper than, because with machine learning, it starts from how you select the data, how you label it, what you include for developing the features, the models for testing, for validation. And for machine learning, you have to be probably, again, triaging every single piece of data that's used to train it. And then comes the black box of how the the LLM interprets it and how it learns from it, which even the leading scientists in the leading firms that offer AI solutions at the moment admit that it's a bit of a gray area, unknown area for them. So again, not to mention where the data lives, because we live in the age where cloud solutions and services dominate. So under the necessary scrutiny and arrangements, data can leave your premises to an external service, right? It's still for some organizations like banks, it's a bit of a deal breaker. But generally, it becomes the norm. And again, last but not least to this, we should factor in cost and productivity, because cost is always an element. It's a part of the decision. And it's even more so in the fraud prevention space, where I've always had to build a positive business case going and asking my CFO for a budget. The compliance pitch is a little bit easier. We're regulated.
Yeah.
We have to do it. The central bank, the ombudsman, the FIU are there. We have to do it. We have no choice. So the pitch of the AML compliance people is slightly easier because they have a good justification.
What are your thoughts on FRAML then? If you put in fraud and AML as one.
I mean, it's different angles and different challenges. I wouldn't say it's easier, but this is, I mean, as I would also say fraud is easier because you can argue it easier when you reduce the fraud within the company, and then you have a ROI quite easily by saying, okay, we reduce the fraud losses by that and this and that. Whereas on the other side, I mean, you shouldn't say too openly, but a financial institution earns money with money laundering. So to argue against that, to say, okay, if you don't have clear evidence that this is money laundering, it's really difficult to argue. Except when you say, okay, we might have fines, but this is such a threat that's so far away that you could get a fine for money laundering that in many cases it's a hard discussion with the board members to say, okay, we have to turn this and that off.
Yeah.
I mean, the fines that we see, just jumping in here, Marcus, the fines that we see in the news, all these tens and hundreds of millions being applied, all these started like 3+ years ago when the actual violation was identified. It was probably appealed by the organization. There was a remediation period given, which were consciously or for other reasons neglected. So when you hear a fine, about a fine in news, there is like a 3-year roadmap before it to get there.
You have to let fraud happen as well, though, because if you got 100% success rate, then something's not right.
I mean, if I would have 100% success rate, I would argue that you have the wrong systems that don't see the fraud or don't see the money laundering.
I mean, I guess, Matt, you're going back to that proactive versus reactive conversation.
Yeah.
And I think the reality is that ideally you're aiming to shorten and minimize your response and reaction time to new fraud patterns. I hate to say it, but probably by nature, the activities of anti-money laundering and fraud prevention are always following something that's happening. The closer you are able to follow it with the tools that give you an indication that something out of the norm is happening as soon as it starts to happen, then your reaction time is shortened and minimized, and you are quicker and more relevant to deploy the necessary countermeasures. From that, going to FRAML, assuming the organization that you are part of, you manage to sway it in the direction of having that long-term strategy approach, how financial crime across the board is managed, then it makes total sense. Of course, we always have the political element of two groups of individuals within an organization are very close peers, but at the same time, they want to have their independence, the budgets for its C-level peers. And it's a little bit of a love and hate relationships, trying to get them on the same tool, sharing it and using it for their areas is sometimes not the easiest conversation, to put it mildly. But from an architecture, implementation, and data perspective, it does make sense.
Yeah. Well, time's absolutely flown. There were so many topics that we wanted to talk about, and we haven't got round to, because we've covered it nicely, right? We've had good context and good examples. When we talk about enterprise fraud management, to kind of wrap it up, what's the nuances there that are really common now, and that you're both talking about when you're talking to clients?
From our side is, again, deploying measures throughout the client journey and having an end-to-end visibility and also ability to exercise decisions and control. Because if you do it in a single point, you're probably applying more friction than necessary, meaning declining more transactions with the compromise of higher true positive, because you have a single point to achieve everything. And let's take one example. Let's say account takeover, right? You can intercept it at the login stage or the access of the account. And then whenever the fraudster tries to get assets out of that account, whatever assets these are, crypto, both. It doesn't matter. So if you focus only on the login, you will be probably inconveniencing more customers by limiting access to accounts or declining logins or applying 2FA or MFA too frequently. And if you focus only on at the back door where money leave the account, you'll be missing the first part of the story, the first season, where the account was accessed from. But if you deploy it both places, and maybe even if you go one step before to account opening, so you have the full history, you can be churning a little bit of the fraud in each of those 3 decision points. So you can be having more accurate rules, even not so on models, even that don't cover all of it. But then you have another chance at the final stage to, act on the full information. So this is really it. Think of detection as a funnel, not a single point.
Nice. Anything to add to round off there, Markus?
Well, that also nailed it quite well already. I would summarize it maybe or add to it. I think really important is, and that summarizes the whole conversation, I think really important is finding synergies and cross-department synergies and having a holistic view, not seeing the things in silos. So as Ivan mentioned before, there might be a lot of political challenges between departments. So this is really important to really step back one step and say, okay, let's have a holistic view. Let's see where we have synergies. Let's see where we can work together. Or maybe even have one position in the company that overlooks the whole architecture. I mean, you have it in IT already in product. You have enterprise architectures there. Which can, and then similar, you can have it in financial crime. So between risk, fraud, compliance, to have a single contact point that steers the holistic view of it. I think this is really important.
As long as they don't sway you in the direction of build. But that's a whole different conversation.
Build or buy, to be continued.
Indeed.
Awesome. It's been an absolute fantastic conversation, I must say. I've really enjoyed it. Thank you both for joining us. If the listeners want to check out what you're up to, what you're doing, what you've got coming up, getting towards the end of the year this year, but early next year, where should they go? What should they keep an eye on? Ivan, start with you.
But our LinkedIn and webpage, NOTO.
Same for me. I'm reachable on LinkedIn and also my website, RiskRiot.com.
Awesome. Well, yeah, check them out there. Thank you very much for your time, both. Pleasure recording.
Cheers. Likewise.
Ciao, ciao.